Another crucial decision, however, which will impact markets and AMC companies particularly listed, is that they have capped or lowered the expenses paid by investors of equity mutual fund schemes. The expense ratio has been linked to assets under management of the AUM, and different tiers, the expense ratio has been lowered. And what is the impact of this, particularly on the financials of AMCs, and how the tier breakup happens? Jayesh Khilnani is standing by to tell us all that's there and the impact of that. Jayesh, considering that just recently in the past, this year itself, they had lowered expenses by about 15 basis points. They've come out with another one. The market was expecting this, but the quantum and the timing of it.
That's right. In fact, the market was, in fact, anticipating, and there's some changes that have come about. First, let's have a look at what are the changes that, or how it's going to likely impact the basis points that we are looking at. So what you have is the various categories. So, they have divided into AUM from 0 to 500 and so on and so forth. So these are the newly imposed total expense ratios that have been defined right now. But what we actually did was by using the Bloomberg terminal, we got what is the average TER for each of these categories, and there is significant reduction that some of the categories will have to go through. In all of my conversations with the experts, what they are of the belief is that any scheme which has an AUM less than 2,200 crores, that will have a minor impact, whereas the major impact will come about for the larger schemes in excess of 2,200 crores, especially the ones in the 5,000 to 10,000 crore bracket and the 10,000 to 50,000 crores. So that's how the total expense ratio looks like. But what's going to be the impact on this on the industry itself, if we can have that one? So the biggest thing that everyone is talking about, that this will now create a level playing field. There will be no differentiation between a larger AMC and a smaller AMC in terms of the performance that they will have to deliver. Of course, it will result in a revenue reduction for the AMCs, and it will also bar the upfront distributor commissions that have been playing out. The point that is not mentioned over here, and a lot of people told me offline, was that this will actually result in selling of other products as well, because if the total expense ratio reduces, the revenue is likely to reduce. So there might be motivation to sell more of PMS products or AIF or other such revenue generating products that we have in the industry overall.
So Jayesh, a couple of follow-up questions. First of all, currently, how much is being charged? You gave an average about it. So is that the average that is there? Do you have a number of how charges? And the market will be keenly watching out, because there are two listed companies, RNAM, which I think Nomura downgraded today, and HDFC AMC, which has been falling significantly, and this comes as a negative, and a lot of brokerages have cut target price. So what's the impact on these two?
That's right, Darshan. Let's break it up into two parts. One is there's going to be an impact on the existing schemes that are there. Some of them are charging significantly higher expense ratios, so they will get impacted because they will have to lower down their expenses. And the other one is the the stock impact. So first, let's have a look at the expense ratio cut. Now, what you have is from the 0 to 500 crores. These are the top three schemes. So they have to revise this down to 2.25%, and you can see that all three of these schemes are in excess of 3%, so they will have to take a significant cut in terms of their expenses. Similarly, if we go to the next category of AUM, so from 500 to 750 crores, the SEBI has now mentioned about 2%, and these are the top three schemes that are charging their expenses in excess of 2.8%. So, once again, we'll see significant reduction over here. While making these, Darshan, what really stood out for me was some of the names that popped up from the SBI mutual fund house. So if you see that there's consistency of SBI topping the list, which means that SBI will have to take a bigger hit as a fund house is concerned. So once again, we have the top scheme over here in this category as SBI small cap fund, which is 2.74%. They will have to revise this down to 1.75%. If we can go to the next category, you can see that 2 out of the top 3 are from the SBI stable. So 2.5% versus the 1.6% that has been proposed or that has been decided. So significant cut will likely come in over here as well. as far as the 5,000 to 10,000 crore AUM is concerned, they have to revise it to 1.5%. And you can see that these top three funds are actually charging about 2.3 to 2.4 odd percent. The next category also, shows you the same thing. So SBI Blue Chip Fund. So SBI is the one that really stands out, 2.4% that they will have to charge for these particular schemes. Now, the stock impact that you were talking about, there have been brokerages that are in fact downgrading the stock, and so we have one from Nomura which has downgraded Reliance Nippon. This was the first AMC to get listed in India, so there's potential downside of about 2%. They've downgraded it to neutral. What most of these brokerages are saying, that earnings of this the entire sector are likely to get cut by about 20 to 25% on an FY19 and FY20 basis. We also have one from which is on HDFC AMC. The target price over there has been cut to about 1765 from 2050. So the stock first of all never went to 2000. It has been revised downwards, and the stock actually trades below where the target price is right now. So 20% that we have seen as a stock correction for HDFC AMC. What they are actually saying is that the potential upside now will be trimmed to about 15 and a half some odd percent. And like I was telling you, the overall brokerage community, they are of the view that this will result in the sector earnings getting cut by about 13 to 15 odd percent. So scheme wise and stock wise looks negative for all of them.
So Jayesh, I saw a couple of, so SBI you pointed out, the other one was Birla
Yes,
schemes.
that's right.
And a couple of Reliance mutual fund scheme. Any reason why their expense ratios is so much higher than the average? Because the average was lower and their was much higher, almost 100 basis points higher. Any reason why this is happening?
So Darshan, I spoke to a lot of people, though no one has confirmed why the expense ratio was higher, but the general observation is that the larger the AMC, the higher the expense ratio that they have. So Birla was one of them, and of course SBI was the other one which actually popped up, because there was consistency while making this. I saw that there was a lot of repetition from the same fund house. So of course we'll also try to get in touch with SBI Mutual Fund and Aditya Birla Mutual Fund to get their views on why and I'm sure that they would have a logical explanation for this.